Besides pitching actionable investment ideas, I like to leverage my previous experiences to share insightful lessons. Today, I like to utilize the skill sets that I've learned at Citi Investment Banking as a senior analyst to discuss why AWS should acquire Hugging Face, an open source AI model repository. It is essentially a GitHub for AI and machine learning models, codes, and data sets. As an investor, Amazon already has strong partnerships with Hugging Face. For instance, Hugging Face's pre-trained models and libraries are integrated with AWS services like SageMaker. Hugging Face also uses AWS as its primary cloud provider and AWS's AI chips to train the next generation of large language model. Pre-existing partnerships and investments make Hugging Face a great acquisition candidate because strategic alignment is already proven and operational integration will be smoother. Let's continue learning more about Hugging Face by identifying how it makes money. The first revenue stream comes from enterprise and pro services where companies can pay for a private, secure version of the Hugging Face Hub, which includes private model hosting, collaboration tools, role-based access control, and customer deployment infrastructure. The company also generates revenue from providing auto-train services, which is a no-code solution that lets users fine-tune models easily. They monetize this via usage-based pricing or as a part of enterprise plans. Another source of revenue generation is pro subscription plans in which individual developers or teams can subscribe to premium plans for increased API limits, private model and dataset hosting, priority support, and collaboration features. Now that we have understood Hugging Face's business model, I will discuss the strategic rationale behind why Hugging Face presents a compelling M&A opportunity for AWS. First, Hugging Face will be a key catalyst in enabling AWS to claim leadership in artificial intelligence and machine learning. The market predicts Microsoft and Google to capture more AI spend than Amazon and goes far as to make a prediction that AI will power Azure to overtake AWS by 2027. While Microsoft has exclusive access to OpenAI, integrating ChatGPT models into Azure, Google has been advancing its AI tools through products like Vertex AI and Bard. Acquisition of Hugging Face, the leader in NLP and AI development with its popular Transformers library, will grant AWS full access to Hugging Face's foundational models. This would enable the expansion of AWS's offering through deeper integration of Hugging Face's generative AI models, faster deployment of Hugging Face's models on AWS, and make AI adoption easier for AWS customers. Moreover, AWS will widen its client base with Hugging Face's early adopters as its new customers. Secondly, the deal adheres to Amazon's customer obsession principle. Although Amazon hedged its open source bet to some extent with the $8 billion investment in Anthropic, a provider of closed source LLM, and developed proprietary AI, AWS also supports open source AI initiatives through frameworks, collaborations, and hosting open models. For instance, AWS strategically hosts multiple LLMs to let customers choose what meets their needs the most. Therefore, Hugging Face's dominance in open source AI would allow customers to adapt their models to their specific needs and enhance Amazon's reputation as a champion of open source innovation. The deal would likely be how Microsoft gained developers' trust by acquiring GitHub. Another reason why AWS should acquire Hugging Face is that the deal will likely be accretive because the target is small for AWS to integrate and is cheap in comparison to the synergy opportunities. Hugging Face was last valued at $4.5 billion in a $235 million Series D funding round in August 2023. Even if the valuation would be higher now, it sure won't be greater than players like Anthropic, whose valuation is at $61.5 billion. Also, considering that Microsoft's $7.5 billion acquisition of GitHub took about a year to integrate, I deduced that Hugging Face's M&A integration would take a similar duration. Last but not least, AWS can gain access to top AI talent. Hugging Face has a team of world-class AI researchers and engineers. Acquiring the company would bring this expertise in-house, accelerating AWS's AI R&D efforts. But what are the risks of this deal? First, there may be heightened regulatory scrutiny. For instance, the deal may not get approval, like how European Commission denied Amazon's acquisition of iRobot on antitrust concerns. The regulatory risk could be tangible given the FTC and the UK also inquired Amazon over its dealings with Anthropic and Inflection. However, I believe that with the new, less restrictive FTC chair and Chinese DeepSeek's impressive advancements in AI, the probability of Western regulators approving US AI M&A has increased. Furthermore, I think that the regulators will likely approve Amazon's acquisition of Hugging Face to promote competition with Microsoft and Google, which are perceived to have a lead against AWS in AI. That said, to prevent any possible regulatory challenges, Amazon shouldn't restrict Hugging Face's models to AWS and spin off parts of Hugging Face's business, separating commercial offerings from open source initiatives. In addition, AWS should work closely with regulators to identify and execute any other reasonable remedies to allow for the deal to go through. The second risk is that there may be community backlash. In particular, Hugging Face's developer-first ethos might clash with AWS' focus on profitability. However, such concern could be overblown given that AWS has already adopted a developer-centric approach. For instance, Amazon's acquisition of integrated development environment players like Cloud9 and Fig are examples of which AWS has demonstrated in adding more development tools and help reduce developers' grunt work. Thus, I think the cultural differences between AWS and Hugging Face may not be very divergent and could be addressed more effectively compared to other companies. The third risk is that Hugging Face's other investors, such as Google, Salesforce, NVIDIA, AMD, and Intel, may oppose the deal. While the cloud competitors would fear AWS gaining too much control over AI model hosting, the hardware players may be afraid that AWS could favor its own AI chips. However, I believe that these fears could be mitigated by keeping Hugging Face independent, remaining open regardless of whether customers use AWS chips or infrastructure, investing in Hugging Face's growth, and paying a high premium on Hugging Face's last valuation to make it hard for other investors to say no. For instance, Microsoft offered a 3.8 times premium on GitHub, yet realized a high ROI given that GitHub's estimated value had more than doubled to $17 billion after 3 years of the acquisition, indicating significant synergies. And that's all, folks. Thank you for watching.